The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, we're back. My pleasure to be here Monday through Friday, noon till 1 o'clock. Dow is up 39 at 22,879. S&P is up 491 at 2555. The comp index at this particular point is 6611, is up 20. We've got the E-mini up 4.25. You see this E-mini right here? Alternative wave count, G/C. This is very interesting. Leg E/B in the weekly chart, 120-minute chart. What happens to my voice just as I'm about to come on here? Let me drink a little water. All right, let's try that again. And the 120-minute chart, I believe, is a peak E. Now, there are a couple of things going on I want to talk about. Let's just do the numbers so I can get it out of the way. I'll give you parameters. 2542 is really the levels for the E-mini to hold from Sunday night into Monday. On the upside, 2556 is kind of the area that I said to subscribers this morning in my opening call every day. One of the many charts I send out is the E-mini with the daily, weekly, and 120-minute chart. And I discuss what we're looking at, what the parameters are. And within the context of the markets, let me just see if I can find this right. Oh, it's the wrong one. 1, 2, 3 charts. It has to be this one. Yeah, we are. So this is what I said to subscribers. For those of you interested in my opening call, here's the daily. This is the weekly, a little narrow there, and this is the 120-minute chart. Why did I show it so big? Is I wanted to show. Let me see in the chart in the Tiger TV. Yep, there it is. Very nice. You see the gray rectangle, and you see the cup, and then the arch. And one of the things I was looking at is the resistance in this rectangle formation. Remember, my contention always is that rectangle formations can last a lot longer than your patience. And this is one that's been going on from the 5th of October. Here we are around about the whatever it is today, the 13th of October. And look, we're in the trading band between the very lows, the 2539 area. What we're really looking at is the 2540 to the 2556 area, 53.56. High today so far is 55.50. And what we're really looking at is what is going on here as we have these high-level consolidations, but this time the MACD is suggesting that any pullback at this stage is going to be somewhat deeper than we've seen before. That is the last 2 weeks. But what's also happening is that the stochastic flat in the 95-96% area is still good. And as long as it stays flat, that's good. And if you're looking at the the unbalanced volume, this little M-shaped blue single line right here, that is unbalanced volume, and it's double topped. I'm really watching this closely because I do believe in many areas we are not just toppy, we are very toppy. And some areas, you see, this is so fascinating, the markets. Right, let me move this away. So this is just one of the many charts that I send out every single day. Today was a little lighter. I'm trying to keep it light because I don't want to get overburdened with positions, because at this particular point, we've raised some cash. I want to keep that cash a little longer. I see some longs. We missed a long today that I wanted. This is not a short ETF. This is a long stock position, and there was a reason for it. I wanted it on a pullback. I didn't want to chase it. I mentioned that the rotation means that all of a sudden we're looking at steel stocks coming on strong. They were strong early last week, then they were very weak towards the end of the week, and then this week they were weak, and then all of a sudden there's news and they pop to the upside, and that's really the difficulty of this market. Yes, you can say we are due for an 8 to 12% correction at minimum. And yet, as long as there is a rotation into other sectors, that's what's going to keep this market buoyant. And that's really the big issue. So if I'm looking at, so this is what I said for my for the daily, I gave this whole two chart scenario. One has 9-period moving average and the 20. The red is the 20-period moving average with the Chapman wave notation plus the Chapman wave 5, which is still in Chapman wave 5 to the upside. We haven't started Chapman wave 1 to the downside. This is the same chart, but I've made it fatter candles, and I've also added the technicals, the on-balance volume, the stochastic, and the MACD. And what I said is, as long as, the stochastic pulled back, but as long as the on-balance volume pulled back, but as long as the stochastic is holding flat in the mid-90s, that is good action. And therefore, we want to just tiptoe into anything that resembles the short side, which is what we're doing. And the MACD fast-moving average is very strong, but really very close based on both the chart formation, see the inside track, resistance, see the little doji candle. Yep, we can go a little higher today, but I suspect that we are really close to some kind of pullback. I've said that all week, but the chart formation suggests that now we've become quite a bit stretched on the shorter term. So what I said was, today if Dow plus 30s and 10 minutes past 10 Eastern time, then the bounce could occur early. That's what I was expecting because there was a Chapman wave high trend reading. I've had them. So there are so few that have occurred high and low trend readings for so long that I forgot what the formula was. The Chapman wave formula is that if it's very high, then within 2 sessions you should see a 9, maybe to even an 11-point rally in the futures, which will impact to some extent the cash. And if it's very low, I never give the numbers out, but if this is the only technical information that I just keep to myself. There are a couple of reasons why. I didn't want to spend 10, 15 years working on this so that I can just blab out the number that I spent all this time working on. And the other thing is that the number changes. About 3 years ago, I changed the numbers to a certain level. And I'm not going to give you a number and then say, oh, by the way, I changed it by, it's my personal thing. But when it's very low, then the Dow invariably has a rug pull early the next morning, goes negative before it can try to go positive. So this is it. So this is what I discussed. I showed it also in the 120-minute chart. If I can find that. There's the 120-minute chart. I said it's a little doji E. Yep, we could go a tad higher, but I've got a strong resistance level, and I'm going to go to the, I can't answer that. There's a strong, let me just make that softer. Sorry about that. So there's a very strong resistance level. I said in the there's a 1-to-1 expansion from, I think it was the 11th of September. The break to the upside above the 20-period moving average. There's a green line and there's an extension that takes you to about 22,920-ish, or maybe 50-ish. So we've been trying to get there, and this has been a very strong move, not denying. Strong move. We do have, for some subscribers, a core position long in the Dow from the 22,300 level or just under it, and that's staying. We're trying to keep that, and we are now we've just implemented a small short position. We'll see what happens. All right, so I didn't get that very far when I was looking at all the different indices, but what we do want to look at is where are the Qs, where's the IWM? We'll discuss it, and you'll see that we are really close to at least some kind of lower highs and lower lows formulation. That's my impression of what I'm looking at right now on the short. I'll be right back. Basil Chapman, Target Conditions Hour, and
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so we're back. Now what we're looking at is the E-mini daily is, see the way it's just snuck to highs, just really very gently. If you look at the SPY, it's actually even more interesting. SPY has just gone to a leg F, with a tiny little dojis. This little cluster formation here is going to be very interesting. Is this the start of a breakout when the stochastics are 95% and the MACD is just starting to flatten out? The histogram's already starting to move negative. The on-balance volume is not confirming the move. I don't think so. Yeah, you can go a little higher because there's this rotational buying. But chart-wise, I would immediately do this, and I am going to do this right now, to say there's a curve going on right there. And I'm not sure how you're going to be able to push and hold into the 25, 256, 80, 257, 70 level without a breather at this particular point. The weekly chart is still very strong. That's all I can say. So, okay. So let me go on. The QQQ series, the Qs are trading at 143.36. The high today is 148. Did I say 148? Yeah, 148.35. The high was 148.50. Couple of things going on. This recycle, so this is really just a formula that says that was a low that was made at 142.10 on the 25th of September. We made a peak A, B, C, D. Why do I make a fuss about the Ds? I bet I can't find it right now. Because in the that was wrong. In the Chapman Wave methodology, get out of that. In the Chapman Wave methodology, let me just find it right here. There it is. We're always looking for the fourth highest peak. And if I can just find it on here, my template, of course, I might have lost it. Probably lost it because I did a lot of cleaning up of my charts and sometimes by mistake. Yep, I don't have it. I always look for the lowest, most obvious low bar and then merely count each successively higher peak until you get to the fourth highest peak. They're alphabetized, uppercase A, B, C, D. Fourth highest peak is the D. There's the D right there, 146.59 on the 1st of September. That's where we pull back to the 142 level. That's 4 points. And now we're up 6 points from that low. So far, the MACD is starting to see. This is what's going on, and it's so fascinating. If you're looking at technical indicators, look at the way the stochastic ratted up, looked as if it was going to pull back on this ugly candle 4 days ago on the 10th when you opened at 147.98, went down to 146.95, and then closed at 140. 760. And then it flattened out. Well, a flat stochastic is a good stochastic. Over 80%, especially over 90%, that is good. And the MACD is still expanding. So I've had the QQQ on my watch list to say we would be looking to short it, but every day I've said no, not yet. And even now I'm looking at it in the weekly chart, it says, hey, there's a little bit more room. And that's why I'm saying in this rotational market, I'm in no rush to get to the short side. We have longs, they've worked out very well. Took some profit yesterday, but in the meantime, back at the ranch, these are positions that are holding very nicely. Even our commodity index that we are holding is up very strongly, but I'm becoming more selective. Let's just put it that way. Now, here's what's very interesting. If you go to the IWM, it's gone into this oval pattern, and it's just sideways for the last 9-10 trading days, all within a very narrow band of 150.68 high and yesterday's low of 149.02. What a tight range. We've never seen ranges this narrow for this long. And not never, but not for a long time. And the MACD's turned down, stochastics turned down, yet the price is holding above the 9-period moving average. This technically, if I just showed you this pattern right here, you'd say, oh, must have pulled back at least 2 or 3 points. No, it's holding very well. That's the Russell 2000 iShares. Look at the weekly chart, made a new high. G/A. Is this an A? Because if this is A, we're going to rally all the way through to the end of the year based on the IWM. If it's a G, we could pull back, and that pullback makes the 144 5 points lower. Really important, 6 points lower. Very important. So I'm just saying, hey, let's hold off getting too carried away here. I do see some sectors. Now, let me go to the SMHs. The Technical Friday, I just want to do a bunch of things here. Up 95 cents yet again in the SMHs. The MACD is good. Stochastics at 96.37. The on-balance volume is pulling back a little bit. Weekly chart is very strong, D/C. And the monthly chart, market vector semiconductor ETF, is soaring in a leg D, a whopping leg D. Nothing technically wrong here. And if you look at stocks like an LRCX, what the heck is that? Lam Research. I remember symbols very well, but not always the name. It's in a C. I try to count it all different ways here. I really can't. I've got it as a C. It still says that it could make it a peak C maybe early next week, and then a leg D, and then it becomes vulnerable. But so far, this is very good action. I wouldn't be thinking of shorting the semis right now based on this stock. But if you look at Applied Material, it's also acting very well. These are leaders. And it's in F/B. Actually, the way it looks right now, it looks more like a B than an F. And leg C in the weekly chart. If you look at Intel, a very laggard. And then all of a sudden, it comes on strong. Ever since Paul sent me an email saying, what about Intel? And that was way down in the 33s, I think. It's trading at 39.58, having made a peak G/C. Still holding very well, even though it could pull back. If Intel starts to break under 38.70, just less than a point from here, lower, then I'm going to say, you know what? Daily at least is going to go to a sell signal, probably a sell mode. Let's watch the weekly chart. But even this is holding well. So when I try to put the package to SLX, that's with steel, big gap up today, 43.80, it's up $1.33. It keeps having this whipsaw action going nowhere. But in fact, overall, this is very good action breakout today, because it means, you remember, I like to go through the different sectors that I always look at to see where fund managers are going. If I look at the IBB, weak today, again, down 71 cents at 336. I had said the IBB needs speed to the downside to say that, okay, everybody's getting out. We've seen just a steady lower lows and lower highs every single day since it made that doji top on the 6th of October, 342.50, the iShares NASDAQ Biotech ETF. But it's still a leg D, probably a peak D today in the weekly chart. So I have to tell you that it's this rotational aspect that is really, really important, and how things play out. Now let's go to gold. So gold, and my contention here is gold up 6.4 at 1302.9. This is good action, but the weekly chart says it's going to need a lot more to be able to. Really, I want to see 1320 at this stage, and then I'm going to say, you know what, gold has had its correction from the high of September the 8th in the area of 1362. It's pulled back to 1260. 1360. That's 100 points. That's a lot, about 8% or something. And now it's acting very well. But at this particular point, all I can say is chop, chop, chop in a range, and I just see it being range bound for now. However, if you look at silver in a little bit of a better chart, it's already in leg B above the 200-period moving average. If you look at platinum right now is in leg A, doing well, but I'm considering this so far it's just a rebound. If you look at crude oil has done very nicely. It's in leg B. Hit the resistance right now at 51.46, up 86 cents. I think it's going to make a leg D in the weekly chart. That'll be above 52.86. I'll be back. Basil Chapman, Dow's up 39, S&P's up 5.55. We'll be back. We'll talk bonds as well. Be back, and then we'll talk about the XLM and some other areas that are.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So, crude oil bumped into resistance, but the MACD and stochastic are attempting to turn around the daily. The weekly chart is still actually looking quite good. And as I said, I think it's going to try to make a leg D by end of next week or maybe the week after that. And that would be above 52.86. That means it has to hold 50.30. That's the key support right now. TLT. Now, this is going to be also very interesting because, look, TLT. The TLT trading at 125.68. What I said to subscribers to my opening call is, if the TLT starts to rally, it's got to get into the high 125s, and here it is at 125.68 up in leg B. Now, I have to put this together and I say, wait a minute. Have a look at this chart on the left, folks. Keep looking here. This is the left side chart. That's the daily. This is the weekly, monthly. Right here is the daily again. Keep your eye on that. Let me do this again. Keep your eye. Keep your eye. Hey, wait a minute. Doesn't it look the same? And that's the gold. Hey, wait a minute. Wait a minute. Doesn't that look the same? And that is silver. Is that an A, 280 to 20? Oh, wait a minute, 280. Yeah, that's a B. So both of them, all three of them now are in B. The platinum was in leg A, big leg A, PL. So I can't deny that everything was met to the downside, and the technicals have turned on the daily charts. The weekly charts for me are still a little bit of a worry. I'm not quite happy that it's all done to the downside. Now, let me show you something very interesting about the dollar chart. The dollar's held quite well considering what gold has done. It's just having a consolidation, something you could expect after a huge move from 91.01 to 94 is the index to 90. I didn't type that in. On the 6th of October, we went to 94.27. So this is, look, 94.27, 10, 6. Hey, that's 94.27 to today's low of 93. What was that? 93.10 or something. 93.24. And holding just under the 9-period moving average. The way the weekly chart is looking, the way the daily chart is looking, the way the monthly chart is looking, it's going to be very important for the dollar to get to the 93.50s or higher, 93.70s actually and higher by early next week without hitting 92.50. Because if it does, that gold is going to go much higher. So I thought about it. Do I want to buy the gold stocks? Do I want subscribers now to be done? We've already got a commodity index, which is doing very nicely. So I just didn't want to go into an area that I did like on the very short term. I wanted to buy it the day of the low. I was thinking of the IAU, which is the 1/10 price of GLD. I decided not to. Maybe that was wrong. Maybe I'll still have to do it. But my thinking here is that gold has had a huge move. It needs a little bit more of a digestion, both on the upside and now on the downside. And that should make some kind of an arch formation. It doesn't have to break the low, go to under 1260, but it could come back to the 1270s, and then we'll see. And that's going to be a big test. Look at the euro-dollar currency pair. Holding okay, not great, but it bounced nicely. Technical suggested that today should have been stronger, but it's not bad. It's at 1.184. But the weekly chart is somehow not ready for prime time. If you look at the USD JPY, and that led the dollar rally, it's weak today, still within a range, consolidation range. It's at 111.84, down 0.44 cents. I'm looking at this and I'm saying, that dollar is holding quite well. If the dollar breaks down, then I have to look at all these other things and say, okay, now we can start to see gold take another big move to the upside. I think that's the way I'm going to look at it. Once again, step by step. And I said that I would look at, what was I missing? I said TLT, we did the TLT. Oh, if you look at the TBT, the inverse, it went to a peak D, it's pulled back. You know what? At the end of the day, it's under the 9-period moving average for 3 days in a row. And it's at a D, and it got repelled from the 200-period moving average, and the MACD's cross negative, and the stochastic. I have no choice. I have to put in a down arrow. It can restart, have a new buy signal, but at this point, looks to me like I have no choice. And that's a little deeper than I would like to see in the TBT on the pullback. We're on the cusp. This is going to be a really interesting. I said that for subscribers, the 2 days, that yesterday and today, are going to be very telling for a lot of reasons. And I have to put bonds, I have to put gold, silver, platinum, crude oil, the markets themselves, the SMHs, everything. This is a very telling phase. I think if we come out next week and the Dow is above 22,800, especially if it's above 22,900 Wednesday of next week, I just have no choice but to say we are still in this phase of the topping phase, and it can go a little longer. And that is for the short term. When I say topping, at this point, I still don't see anything on the downside if there's a rotation. I can see 3%, maybe 5%, but I suspect that if the Dow actually takes out 22,550, so 20,880 right now, closes under 22,550 in the S&P, that would be, so let's say the S&P is at 2520 or 2525. I think the selling could intensify, and that's really the issue. Now, the rotation is the same thing that we are seeing. If you look at the emerging markets, look at this. Still, I have to call this a leg B. I could give it other names, but really, everything about it is a leg B in the daily, G/C in the weekly. Look at that trend line. And just immediately I see a trend line about to be broken, and a leg C in the monthly chart. This is the iShares Emerging Market ETF at 46.66, up 42 cents. Would you rather buy EEM or General Motors at 46.04 right now? 46.66 for the EEM or General Motors at 46.03? I'm thinking that, it's a good question. What I'd said the other day was at 24.16, I think it was. Would you buy the GDX? 23.16. Would you buy the GDX, the UUP, that's the gold miners ETF, market vectors, the UUP, was it 24? I think it was actually at 24.16. The UUP, which is the dollar index, or what was the third one? Oh man, there were three that were just, it was just a perfect relationship. Well, I can't remember. It sounds like Rick Perry, right? Number one, yes. And number two, yeah. And number three, what was number three? Yep, well, that's it. Number three, I can't remember right now, but they were all trading at the same price. Oh, General Electric. General Electric. Well, General Electric's now at 23.07. Yeah, it was 24.16. General Electric's at 23.06. Horrible, horrible chart. The GDX, nice looking chart on a short-term basis. That weekly chart has me worried. I still see it retesting the 23.10 to 22.80s at some point. I'll be wrong if this spirals to 24.50 by Wednesday of next week, but I think it's still in the chopping area. All right, so enough with that. I had a lovely email from Greg the other day. I think I started to read it, maybe I didn't, but it goes something like this. Good morning, Basil. I intended to send you this close to a month ago. Anyway, what he does is he's driven the Ford F-350 with the diesel. He's also the Chevy Silverado. Anyway, he discusses these trucks, and it's unbelievable. The diesel, as he says, and I know this because I've been in one, the diesel can be so quiet, and nowadays they can be so quick. That's a big change. Anyway, thanks, Greg, for all that information. I'll try to put it into a package one of these days, and we'll look at the XLE. We'll look at it as soon as I get back from the break. XLE coming up.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. Let me just go one step at a time. So XLE is at 68.37. It's up 19 cents. You see you remember the IWM at the sideways trading band? This is even longer, and it's gone basically in an oval formation. There's a stalk formation. It says there could be one more pop to the upside, but then it's probably coming back inside here. The MACD and stochastic, everything's deteriorated, yet the price is holding above the 9-period moving average. For me, price is the arbiter of a trend, and if it stays high, it means like a balloon that's in the air. When there is a lack of upward draft, it can kind of drift sideways and start to pull back a little bit. And as soon as the air comes back, the question is, does it just hold at this new lower level, or does it have a big rebound that goes even higher than before? And it depends on how the momentum and the torque is all put together. And in this particular instance, it looks like you can call it a holding pattern, re-energizing, or you can say it's a distribution pattern. My eye says I'm thinking distribution for the XLE, which is the S&P Select Energy Spider Fund, but I'm not going to make a judgment. The question should be, would you buy it or would you sell it, or would you just step aside? I have to say I can see a little bit of a pop-up, then back again, but I do see that if it closes under 67, I'm going to give it a little room. It's at 68.38. If it closes a 1.5 lower, closes on any day in the next 3-4 days, it's going to be coming down quickly to the 66.60s, the 9-period weekly support level. So upside, I think, is there, but it's very limited before it comes back into the range, stuck between the 200-period simple moving average and the 200-period orange-colored exponential moving average, sitting on the 9-period moving average. It should have moved already, and it hasn't. So I hope that, I don't know if it can help you, but I'm just saying that it's just stuck. I don't think I'd have any position. Now, telephone, T, whoa, look at that. And what I discussed the other day was I was very concerned about the telecommunications area, the Verizons, etc. I know just from my own experience, having gone in the other day, I mean, I pay a bundle for all these different services, and I just haven't had time to sit down and sort through it. And I've kept one because it has my email address for years. I would have changed it a long time ago, but now I'm looking at, I get Comcast for the internet, and I've been very satisfied with Comcast. And I'm looking, I can get a whole bunch of their services. I might just switch, and I think a lot of people are doing the switching, and that's what I think is really the issue here. Look at the Verizon right now. It was holding not bad the other day. Now it's pulling back. So I'd be real careful with telecommunications. I just think there's so much competition now, and they're having and Fios is very good, I believe, but people are switching and people are cutting and people are doing this and that. I wouldn't be doing anything with AT&T. Next question is, hey, could you talk? Hey, could you talk about Bitcoin today? Please explain just what it is. You're asking me to explain what Bitcoin is. All I can say is it is an alternative currency. It's a lot more complicated and a lot more simple than people think. Complicated because of the way it's formulated and what it really is, but very simple in that it's still just a price. I'm looking at the fund, the Bitcoin Investment Trust, which is trading at $6.95. I had said back in August, going into September, remember I did a workshop and I discussed it and I said, you know what, I'm thinking that Bitcoin is going to have a very sharp pullback. It's in an F in the daily, peak F, probably going to make a D in the weekly and a leg E in the monthly. And someone said, well, where would you buy it? I said, I wouldn't be afraid to trade it because it still acts like any old stock, except it does have speed. Now it doesn't have speed, but I'd probably be waiting for the 450s. Well, I forgot about that. Lo and behold, it hit 481. Hasn't gone to 450 yet, but it went from 1,064 to 481 on September the 14th. In just 2 weeks, 2-3 weeks, it just plummeted. So you've got to be very careful with these things in the sense that there's a lot of overnight whipping, but lately it's just been stuck in a range. So I'm not the one to talk about the fundamentals other than to say to you, treat it as any other stock, but be prepared that the actual speed when it does take off and gaps to the upside and downside is way quicker. So if you can't trade it overnight, in other words, if you can only trade during market hours, I say stay away. If you can trade it after hours, fine, just treat it like another stock. If you know that your stop will be put in or buy stop will be put in and taken. I don't know about shorting. I don't know I think it must be ready by now to be shorted, but I just be careful in terms of the stops. That's all. Next question I had was it's AT&T. The IYT has made a new all-time high. Gone to a G/C in the daily right at this moment. Leg C in the weekly. I can't count it any other way, but a C in the weekly, and the monthly chart is in leg E. The big thing here is at 179.55, the iShares Transportation Average ETF, IYT, at 179.55, down at just over $1. If it closes under 175.70, now that's going to be about 4 points from here. On a weekly basis, if it closes under that, I would expect even more of a consolidation. Then I'd expect that either 172s will be next. But if it takes out 182.50, remember it's at 179.52, today's high was 180, opens at round number 181, goes to 181.57, low of 179.52 is just about there, 50 right there. Yeah. Be careful. I think look at this MACD stochastic. I think this is going to be the clue that we're starting to do some topping right here. And it's a very selective topping, but it is topping. Now, XLF. I said I'd do the XLF. Now, look. XLF has made a peak D doji high on the 6th of October, 26.46. It's pulling back. It's under the 9-period moving average. The MACD is turning down. Stochastic still good at 83%. Weekly chart is very strong, but it is a D. D is where we get, this is what I said. Other things can happen at a peak D. We saw that in the D of the daily. The D of the weekly will be, there's no way that it's going to go above, I'm going to say that right now, above 26.46 by the close today. It's just 12 points, 12 cents, I mean. No, I don't think it's going to do that. So I suspect we are getting a peak D in the weekly chart. And that says, okay, watch closely because 25.50 is going to be absolutely critical support for the XLF. If you go to different stocks, JP Morgan, made a peak D. Goldman Sachs made a peak D, I believe. Yep, there's a doji D. Bank of America, this is the one that we've been long for quite a while. And we took a little profit yesterday. It's up very nicely. It hit 26.30. We're in the 23s. And all I can say is that I'm anticipating some choppiness now in the bank index. Why? If you look at the TNX, and this is going to be very interesting. My contention has been that lower yields and higher bonds will be in place when we start looking at lower highs and lower lows in the market. And now we're kind of at that phase. I would love to see an adverse thing, seeing the dollar actually rally, gold pull back, mix it all up so that you don't get your inflation, you do get your inflation, higher bonds, low bonds, everybody's confused. That to me would be a nice picture for a 3 to 5% pullback. Love to see that. So TNX, the 10-year yield, trading at 22.84, down 39 cents. I'm looking at this and I'm saying, you know what? That TLT at 125.63, I think there's a chance that it's going to test the high of the 25th of September of 127.27. Wouldn't that be interesting? Basil Chapman, Tiger Technicians Hour. I've got one little segment coming up. Then, of course, you've got Steve Rhodes, and I will be doing the 1 o'clock update. So here we are. Dow's up 40, S&P's up 5. Be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back. Last segment. Let me just go through this. I had a question about MBI. I did it the other day. I said, hold on, and it dropped even further from the 750s down to the 684 level. Looking at this chart, this is MBI's MBIA Inc. Can't remember what they did. But what I am looking at is this little doji inside candle right now. I was going to say, normally I would look at it and I'd say, you know what? If it breaks above yesterday's high of 7.23 by 1 penny, I'd probably start a position there thinking 754 is the 9-period moving average. Instead, for that 45-cent risk, I'm going to say to you, Sandy, why don't you right here at 6.84? It's a horrible, horrible looking chart, but it could start to build a base, and it could have, for that 40 cents, let me see what the low was yesterday. Yeah, 664. If you're prepared to give it a 40-cent stop at $6.84, buy it a very small position, because it's really a feeler position. Buy it right here at 684, have your 644 stop, and if by Tuesday it hasn't even broken that level, and instead it's broken above yesterday's candle of 7.24, you've got a chance now putting in a stop at your entry price, or even just keeping that or making it a 20-cent stop, even less, and saying, okay, let's see how it does, because it's a process at this point. I don't think it's going to be a V-shaped turnaround, but it could be a process. So there you are. That's what I do. It's a horrible, horrible looking chart, but this is exactly the way sometimes a base is built for at least a decent rally of percentage terms. Maybe not so much time, maybe not that much in price, but anyway, that's what I'm saying. Now, let's do this because we're about to break for the weekend. Have a wonderful weekend, everyone. What I'm looking at is the VIX index is now down at 954. There is constant buying all the time with the VIX below the 11s, let alone below 10. There's just buying pressure. What I'm really looking for is a move at some point where the volatility index jumps above 1150, bad news permeates the market, and instead of dissipating by the end of the day and going back to the nines, it holds. We haven't got that. I'll discuss it in greater detail Monday. But in the meantime, everything I'm looking at says there are a couple of sectors, a couple of stocks that need one little bounce to the upside before they complete their moves. But slowly but surely, I think we're getting to the point where I am looking at the resistances in the Dow between the 22,920s and 960s as being very strong, and then we should see slightly lower lows. Have a great weekend. Check out my opening call. I'll be back on Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today. If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.